Hi everyone, my name's Tim Fairweather and welcome back to another Brooks Price Action Weekend Market Update. And today we're going to look at the FTSE 100 Futures and Cash Index. So let's check it out. FTSE index on the monthly chart, let's just take a look at the higher time frame. So if I put a fib from the open gap, which is a target for the bears, if this is 3 legs up in a bull channel, a potential wedge top, the bears are looking to sell probably for 1-to-1, but their swing target would be to close this gap. There was an 0-0 and I've got a couple of targets above and below. At some point, we're going to reach the top one. The bears would really like to reach the bottom one. So they've got consecutive bear bars, but at the moving average, I said in my monthly report that I didn't think that was a great sell. I think there'd be more buyers there, certainly buyers who bought up here, buying lower, getting out of any long position and waiting for another buy signal. Here is the slide I prepared for the Brooks Price Action blog, FTSE 100 on the weekly chart. Swing short for a gap close, always in short, but in a bull channel. So what typically happens in a bull channel that's been going on for a while, there's no new gaps. This was a very strong buy climax, and we don't call it a buy climax really at the time. We usually look back and say, well, it could have had a breakout and got higher. No one wanted to buy strongly above that bar. They were happy to buy below it, below that, and scaling in for when it turns into a trading range. But because the pullback was so deep, we turned it into a trading range immediately. And that means bulls want to buy in the bottom third, which we're probably going to see next week if we get down there, and bears are happy to sell in the top third. So when it goes always in short, it forms counter trend wedge patterns. It probably needs a third leg down for that to set up a counter trend wedge. Now, if we look at the same kind of trade on the weekly chart, we've got this sell signal up here. I said, because it's a bear inside bar, a lot of traders won't take that for a sell. The next week was a surprise, however, and we shot down. But look at this big tail. I said in my report, I didn't want to be a seller where everyone was buying. Once this bar closed, this changed the story. Now, everyone got a chance to sell back at this same price up here. You've got an inside bar breakout. Now you've got a short sell with a stop above the high looking to close this gap, and I'm pretty sure they'll do that on Monday. Where to from here? Well, the next gap is down here, so the bears are going to need to keep this next week's bar inside the range of this bar, which is likely because this is a big bar. It's not a great buy below, it's not a great buy the close, so more likely to go sideways to down on the weekly chart. This is the slide I prepared for the Brooks Price Action blog. You can see it's got FTSE 100 daily, and I've said only gaps are below lower high double top or testing prior all-time high. Here is the prior all-time high. We're back down at this breakout point. We're also at the 200 bar moving average, which has acted as great support for the past few months. It's been a source of great swing trades for myself, and it might be time for the party to end. If it was so easy just to always buy the 200, well then no one else would be on the other side of that trade. You can see every time we've touched it, it's created huge buy signals. Because the bear swing point is up here, this has got a chance to go more sideways to down before the bulls can set up a defense. On the FTSE 100 on the daily chart, you can see we've got consecutive sets of bear bars below the moving average. You could draw a million different kinds of wedge bottoms, but instead of doing that, at the moment you've got at least 1, 2, so 3 legs down. This is incredibly strong, and we haven't taken out any lower highs. That means this is more likely to be a bear channel, at least in the short term. Maybe the middle is there, and this is more likely to go sideways to down. This is now 4 bear bars below the moving average. Once that gap is closed, they just missed it on Friday. I think we'll pull back to the center of this channel line and probably keep going sideways. Can you sell here? Well, we're at a target, so I don't want to sell. I think the next best sell would be above the high of that bar, so above the high of Friday. It's in the middle of the channel. Some bulls might expect to get 1.5 legs on the way up, but I think we've triggered a short on the weekly chart. Therefore, I prefer to be only a short-term buyer on the intraday. I think there'll be a better sell coming up here. But this is also a tight trading range, so if we get back up there, it might act as a magnet and prevent traders from getting a swing short. So sideways to down on the daily chart and sideways to down on the weekly chart. Well, thanks very much for watching. This has been the Brooks Price Action Weekend Market Update. My name's Tim Fairweather, and I'll see you next weekend.